Hey, if you're a homeowner right now, I want you to look at this number, 81%. This is from Royal LePage's 2025 mortgage renewal survey, and it indicates that 81% of homeowners feel like they're going to have financial strain in 2025 from just renewing their mortgage. So if you're feeling this pinch right now, you're not alone. A staggering 75% of Canadians currently have a fixed rate mortgage. And these Canadians are locked in at super low rates during the pandemic, with some people who still have a 2% fixed rate or even lower. And these low rates just aren't possible anymore in the current market. And even with fixed rates in this market, Canadians are looking renewing at 4%, 4.25% on the fixed side. So that's a whopping 81% of people who are going to feel these higher financial strains when they renew their mortgage this year. So how will people manage this, and what will Canadians do? What are the options that they have? Well, based on the survey over here, a lot of them will be making lifestyle changes such as limiting discretionary spending, skipping vacations, or will some people just opt to sell and move altogether, eliminating all mortgage costs? So if you're a homeowner with a mortgage that's renewing this year, leave a comment in the description below and let us know what you'll be doing to manage your higher mortgage payments. And in this episode, I'll dive deeper into these numbers, talk about the dire situations that some homeowners are facing, and discuss the options that homeowners have when they're facing this incoming mortgage renewal in 2025. So be sure to keep watching. Hi, my name is Zen, and if you're enjoying my data-driven and number-crunching real estate updates, be sure to like and subscribe. 81% of Canadian homeowners. That's the magic number in the survey that says they're going to feel financial strain on mortgage renewal. And of those who surveyed, how many people are just planning to sell their home due to this financial strain? A total of 39% of them plan to sell. And of that 39%, 10% want to downsize, 14% are considering relocating to a more affordable region, so like really big location, and 8% are planning to sell and rent instead, and the other 7% is planning on selling and moving in with family or friends. That's a scary thought to think about because we're already at 20,000 unsold properties, which is like 50% above the 10-year average at the moment. And if you're concerned about your ability to keep your house given this information, make sure to book a call with me using a link that's over here so we can just talk about how you can stay in your home and what the avenues you may have. Now, will this additional amount of new listings already added to the already inflated like 20,000 plus unsold inventory? Absolutely, 100%. Although, like a tiny part of me, maybe like a slightly bigger part of me, doesn't really believe that because these stats are from a survey of like 1,300 homeowners. And this is mainly because I don't really personally remember more than like 2 or 3 calls where like prospective clients were concerned about this mortgage renewal that they called me for. But then again, it could just be like my clientele, or it's just, isn't on some homeowner's mind just yet. We'll see. Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, put decades of experience to work for you. Now, the other 69% in the survey don't plan to sell or plan to rent out a part of their home to help with their new mortgage expense that's higher. Now, this chart here is showing you what homeowners plan to do to reduce their spending and cover their increased mortgage expenses on renewal. These numbers here, honestly, aren't that important. But what's important here is the willingness of these Canadians to do whatever it takes to pay their mortgages. That seems to be a norm since I've been licensed. Could this be really, really bad for our GDP? 100%. Now, one of the problems I have with surveys like this from Royal LePage is that they're rather subjective and anecdotal in nature, especially regarding money, which again, whole separate topic on its own. And this is why I have like another anecdotal survey like this one over here that says that half of Canadians are living paycheck to paycheck, which of course would mean that, if there's any large reoccurring monthly payment shock, such as a mortgage renewal being one of them, statistically, half of them are going to have a very, very, very hard time, especially if they're paycheck to paycheck. Granted, I'm not really sure about this survey, who they surveyed, because in this stat says that homeowners and those who are not homeowners in Canada, there's a significant big wealth gap between the two, right? So it really just comes down to who they survey and how many they survey and how good that core set of data is. Another reason why I don't think we're going to have a lot of like panic sellers trying to sell right away from mortgage renewals is that a lot of people don't really know this, but you can't really like jingle mail your house back to the bank that you could do in the US during like the great financial crisis. In Ontario, we have something called a recourse loan in our province, which means that the banks can come after you to recover the money, like the difference, after they power of sale your home. Your wages is what I'm talking about. Another thing I found rather interesting was like all this talk of mortgage renewal cliff being catastrophic and everything, when in reality, everyone who got a mortgage during the pandemic would have been stress tested at 5.25% anyways to be able to afford it. Meaning they're going from 2% interest rate to like 4.25%, which is less than the stress test of 5.25%. So in theory, they could afford it as per the banking regulators' guidelines, unless their income has decreased. Then you also have the fact that, the amount that's going up is approximately like 33%, which may not affect that many households, especially if their incomes have increased in the last 5 years, or they have paid off their mortgage in the last 5 years, on top of reducing their spending. And if you're just curious, here are the numbers for if you're going from like a 2% to like a 4.25%, so you can judge where you are on your mortgage. And then on top of that, they could always re-amortize back to 30 years to stretch their payments, but lower the monthly payment costs. This is why a little part of me says, I don't think it's gonna be that big of a deal. Now, back to the Royal LePage survey, there is some interesting data I wanna share with you. This chart here shows you where all the existing mortgages are. And 85% of the mortgages are at your major banks. The other 13% and so are at your non-prime lenders, so your B lenders or your private lenders. And this is where I think a lot of the bigger payment shocks will happen, on top of where a lot of the delinquencies will be happening first. Remember all that talk about the negative amortization and 100-year mortgages and how everyone is going to get screwed in addition to the mortgage renewal cliff? Well, it is 27% of mortgages that are variable right now. And only that 27% will qualify for the negative amortization because you have to be on a variable. And only one of the 5 major banks doesn't negative amortize, which is Scotia. So assume 80% of the 27%, or approximately 20% of the mortgages right now, could be negative amortizing. I don't think that's enough of a big problem to make the entire market blow up. And I'm also positive that banks are putting a lot of measures in place to assist these mortgage borrowers to revert back to their regular amortization. But for those who are affected, depending on the income situation, it's definitely going to hurt. I just don't think it's going to hurt the entire market because there's a lot of re-amortizations that can happen to bring the payments back down and bring them back to the regular length of duration of the mortgage. And depending on when your mortgage renewal is in 2025, maybe 2026, the rates may change given all the volatility that's happening in financial markets. Look at just down south. We just had an election, maybe another election, right? Just craziness is happening in this year. So to understand some of these volatilities and which direction the mortgage rates are heading, make sure to check out this video over here where I analyze some of the latest macroeconomic factors that will have an impact on the mortgage rates for when you renew your mortgage. I'll see you in the next episode. And remember, your move, your future. See ya!